Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at losing trades. But let's look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. And that's the topic of today's video. Today I want to have a look at a 3-minute chart of the YM. This is using our MTPredictor standalone version. We're looking at the regular trading hours for the market yesterday. So I want to look at these two history triangles here, which would have resulted in losing trades. It's important to understand that losses can and will and do unfold. And I think it's important that software vendors and gurus do actually show losing trades. So it's important for new customers to understand that losses can and will and do unfold, no matter what trading approach you take. With MTPredictor, we don't use a black box system. We don't look to take all our trades all the time, even though we have automatic setups on our charts. We don't do that because we know and understand that markets are random about half the time. In other words, just over half the time you can't get any discernible clear pattern. So what we do is we go to the higher time frame chart and we look to place our DP support levels on the chart. Then when the market, or if the market, is making reversals in and around those levels, we deem that the picture's clear. Now these are on the chart in advance. So if I use our training mode and I go back into advance, I could place DPs off previous pivots. We don't use all the pivots, we use specific pivots, but these are taught once you become an MTPredictor customer. As you can see, these are on the chart in advance. So if I turn training mode off, you can see the market did go down to these levels and actually carried on going down. Of course, the backdrop to this is Russia potentially invading Ukraine, and I'll talk about that a bit later in the video. But for now, we'll just look at the pure technical side of the setups. So if I go back here, you can see that the market came into this level. There was a history triangle there which showed that it was actually a trade setup at the time. So I'll just use our training mode to show you that. There it is, there's a setup at the time. It looked to be a good setup because it was at higher time frame support. Our MTP trend had gone grey, therefore this was a setup you could have considered. If I place the analysis on, that will allow you to go long. Remember, we use correct position sizing to keep our initial risks under control. If I step forward, you can see it would have been taken into a long trade there. The market then reversed fairly quickly and would have stopped you out. So this would have been a loss. But this is where position sizing comes in. Because we use correct position sizing, this keeps the loss at what we call minus 1R, or 1 risk unit. I'll just take that all off. Stop trading mode and then have a look at the next one down here. Again, into the support zone. There's our history triangle to show you there would have been a trade setup at the time. We hide nothing in MTPredictor. There's no point hiding losing setups. I mean, that's pointless, isn't it? So here we show that if there was a trade setup at the time and you would have been filled on the next bar, we show that so you can place the analysis on it and you can investigate it a bit further. This one may have been slightly different because the market just clipped up to that level before then taking you into a short trade. So you may have been filled, you may not. So let's take a worst case scenario and assume that you were filled. If you were, again, that would have been a losing trade, but that loss would have been kept small, again, at minus 1R. So that's the whole purpose of this video, to show you that losses can and will and do unfold. Obviously then it would have been good because earlier in the day there was a sell set up there. Now this is all happening in the backdrop of Russia potentially invading Ukraine and the potential war in Europe. So of course, even though we don't follow fundamentals, it's always worth having an idea of the fundamentals in the back of your mind. So as I said in the last couple of training webinars for our MTPredictor customers, it may not be a good idea to consider long trades on the stock market. It may be better to try and consider short trades because the risk is that the market is likely to make a sharper move down, particularly with war in the background. So that's what I recommended to our customers, is that they should be very cautious about long trades, and if anything, avoid the long trades and look to take the short trades. But I wanted to do this video just to show you that even if you did take those short trades, the losses will be kept small. Let's see how it compares to the sell setup earlier in the day. So if I place the analysis on this, you can see here that it says our risk was exceeded. So it does keep you out of trades that are too big and too risky. If you were looking to take this, you could perhaps look at the MYM, the Micro E-mini. So let's go and have a look at that one and place the same analysis on there again. If you were doing that, again with the same 2% risk on a sample $20,000 account, that would have allowed you to take 7 contracts on the Micro. That would have gone down to the first target there, which then would have had a 3-hour profit. That's why we use position sizing. So when you're wrong, the losses come through at -1R, they're kept small, but when you're right, over time, you hope that the profits are larger than the losses. So successful trading is not about avoiding losing trades. They will happen. It's always just a part of life when you're trading. But the trick is trying to keep those losses small at one risk unit. So when you have your profitable trades, you allow the trades to run, so you have profits that are larger than the losses, and that's what makes you money over time. But as I've said already, this was in the backdrop of potential war unfolding in Europe. So it's a case of sometimes you have to be a little bit sensible. So in this case, you really want to be focusing on the short trades on the stock market and perhaps the long trades on oil, rather than looking to try and buy the bottom. This phrase we use sometimes is it's dangerous trying to catch a falling knife. So you can get in serious problems. So that's why I suggested that even though there were buy setups or potential buy setups coming in on MTPredictor, and they were valid if you're just using the MTPredictor system, just be very cautious, because in this kind of environment the market can move down quicker than it would move up. So perhaps it might be better for the time being to look to avoid the long trades, as I recommended to our customers over the last couple of weeks, and look to only consider the short trades on the stock market and the long trades on oil. But anyway, the purpose of this video was to show some losing trades and to show how we try and keep those small, and on the profitable trades try to look to run those so over time profits are larger than the losses, and that's the key to a successful trading approach.